It's Friday, the 15th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
The Reserve Bank adds its substantial weight to the climate change debate. That's our main story. Also today, nearly 140,000 jobs lost in the labour market, a $2.8 billion deal for a copper mine, and some of the most unloved stocks make a comeback. Then stay listening for Sean's chat to Alan Oster, Chief Economist from National Australia Bank, about yesterday's labour force figures. But first, Sean, the Reserve Bank certainly gave its 2 cents worth yesterday about the climate change debate, urging action from government and from business.
Yes, Michael, the Central Bank's Deputy Governor, Guy Debelle, provided a clarion call for the local market to transition to net zero emissions. Otherwise, risk doing some serious long-term harm to the economy. He said the longer we leave it to reduce carbon emissions, the more drastic actions will need to be taken. Mr. Debelle called climate change a first-order risk for the financial system. Of course, it comes as the federal government is trying to negotiate a pathway to zero carbon emissions, or at least reduced carbon emissions, to take to the United Nations Climate Change Conference next month. There are still deep divisions between the Liberals and some Nationals on the issue. Prime Minister Scott Morrison is still yet to commit to the Glasgow summit, and yesterday the business community's leading advocate of renewable energy, Fortescue's Andrew Forrest, called on the Prime Minister to attend. Mr Forrest also hit out at fear-mongering Nationals.
Sean, is it unusual for someone as senior as the Deputy Governor of the Reserve Bank to be so strident, I suppose, about climate change and its impact?
Well, it's a subject Mr Debelle has spoken of before. Obviously, it's close to his heart, though yesterday was particularly pointed. Certainly, his comments put pressure on the government to come out with something concrete around emissions reduction. And given the climate debate is now front and centre, his comments will well and truly be heard in Canberra.
Right, and so what are his fears then for the economy?
Well, clearly the Deputy Governor understands the need to transition over time, not immediately. But he also said investors could avoid Australian shares and bonds because of the climate change risk. He warned of stranded assets. They're assets that are no longer worth much because of changes to consumer demand or policy changes from government. And he said reducing emissions could have dire consequences for the coal sector, and climate change could impact all sorts of things, including housing loans and what banks are willing to lend. However, the Deputy Governor did end his speech on a more optimistic note. Mr Debelle said Australia has been an energy exporter for decades, and there's no reason for that to change. It's just that the energy needs to be renewable, not fossil fuels.
Yeah, fair enough. How did markets perform yesterday?
The S&P ASX 200 closed up 0.5%, not bad, to end the day at 7,312 points. Technology stocks led the way, and to a lesser extent the big miners. Energy and financial stocks were the worst performing sub-indices of the market. Now, among the tech stocks, accounting software group Xero led the way. It jumped more than 5%, while Afterpay was up 4.5%. WiseTech Global, which is the logistics software group, which doesn't have a particularly high profile, it rose more than 7% and is now 90% higher than a year ago, easily the standout performer among the tech stocks. It's now a top 30 company on the bourse. The gold stocks also did well as the price of the precious metal heads towards $1,800 an ounce. Fears of inflation and low growth, otherwise known as stagflation, are boosting support for gold. Oil prices remain high, still plenty of uncertainty in that market. And Michael, Bitcoin's recent run has continued. It's worth around $58,000 a unit.
All right, what about Wall Street overnight?
It was a very strong night following some better than expected corporate earnings. The September quarter profit season for US companies started this week, and the results so far have been pretty good. In early afternoon trading, the S&P 500 was up 1.7%, the Dow Jones Industrial Average was 1.5% higher, and the Nasdaq 100 had jumped almost 2%. European markets were also stronger.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. Let's start with unemployment. The local economy lost 138,000 jobs last month, meaning nearly 300,000 positions have now gone since lockdown in New South Wales and Victoria started.
Yes, Michael, but thanks to a drop-off in the number of people looking for work, the unemployment rate only rose to 4.6% last month from 4.5% in August. Now, the participation rate fell for the third consecutive month, meaning the unemployment rate is masking the extent of the downturn in the labour market. Victoria last month shed most jobs, 123,000, while New South Wales lost just 25,000 positions. New South Wales had lost 173,000 the previous month. There was really good news out of the other states, though, particularly Queensland, where 31,000 jobs were added.
All right, so that's the key top-line numbers, but what's it all actually mean?
Well, Federal Treasurer Josh Frydenberg said the figures were better than expected, and he's probably right. Also, Fitch Ratings Agency yesterday upgraded its outlook for the Australian economy. That's a big tick. But since the East Coast lockdowns began, 330,000 people have stopped looking for a job, and 281,000 have lost a job. That's more than 600,000 people who don't have a job, and that's the real story. The number of hours worked has been tumbling, though it did rise a bit last month. Underemployment, that's people who can't find a job or aren't working as many hours as they want to, is now more than 9%, much higher than pre-lockdown, but not as bad as last year. The good news is that job losses shouldn't be as severe from here on in, as New South Wales, the ACT, and hopefully Victoria next week reopen.
Now, Sean, speaking of Victoria, the COVID numbers in the state were shocking yesterday, 2,297, which is a record for a 24-hour period, and almost half the cases were detected in people under the age of 30, many of whom, unfortunately, were likely to be in the community while infectious.
Yes, after the last few days, that number was certainly sobering. However, it won't delay the opening up of the economy, Premier Daniel Andrews said, and he urged people to get jabbed. A 70% vax rate should be hit by the state next week, allowing for an easing of restrictions. New South Wales recorded 406 new cases yesterday. It's got a vax rate of 77%. There were reports out of the state last night that residents from Greater Sydney would not be able to visit regional New South Wales, even when the vax rate hits 80%. The ACT recorded 46 new cases yesterday, and it's got a near 99% one jab rate. Pretty impressive.
Yeah, that's extraordinary, isn't it? The thing that I like as well, though, Sean, the comments from Federal Health Minister Greg Hunt, he said that 55% of 12 to 15-year-olds across the country have now had at least one jab. And at the other end of the age scale, 97% of over 70s have had one jab and 84% are fully vaccinated. We have come such a long way, haven't we?
We sure have. We sure have.
Now, Sean, copper certainly is a favoured commodity at the moment, and there was a big deal from South 32 yesterday.
It sure is, and there sure was. South 32 agreed to pay $2.8 billion for a 45% stake in a mine in Chile near BHP's copper operations in that country. Buying the Sierra Gorda mine is the biggest transaction in South 32's 6-year history, remembering that it was spun out of BHP. This is the third big copper deal by an Australian company in the past 4 weeks. Quite incredible. Sandfire Resources acquired a Spanish copper mine late last month, and Newcrest Mining earlier this week gave the go-ahead to develop gold and copper mines in Canada, PNG and Australia, with its CEO hinting at a much redder, rather than golder, Newcrest in the future. The Sierra Gorda mine is expected to produce about 180,000 tonnes per year of copper. That's about the same as BHP's Olympic Dam mine in South Australia.
Geez, copper certainly has plenty of friends at the moment.
It does. It conducts electricity better than pretty much any other metal apart from silver. It withstands extreme temperatures. There's plenty of supply, and it's undoubtedly a commodity of the future as the world goes electric and renewable. Now, copper prices hit an all-time high back in May, and they still remain pretty high.
I mentioned, Sean, at the top of the show, some unloved stocks that have been bouncing the last couple of days, and they've been led by A2 Milk.
I love this story only because for months we've been talking about A2 Milk being the worst performer of the top 200. Well, it added another 4% yesterday after Wednesday's 13% rise. There's plenty of enthusiasm about the return of the Daigou channel to market for A2. It's meant for the first time in many months, A2 Milk is not the worst performing stock over the past year. That honour now goes to AGL Energy, which I'll let you know, Michael, was listed on the Sydney Stock Exchange back in 1871. It's one of the original companies, but it's now trading at near 20-year lows. Another company that's done really well recently is Whitehaven Coal, which couldn't find a friend 12 months ago. It owed tens of millions of dollars and was asking its banks for help. Whitehaven was selling a commodity whose price had hit a 5-year low and was facing up to the COVID recession. Then, coal supply tightened, in part due to China's ban on Aussie imports, and prices rebounded, jumping 500% in little more than a year. Yesterday, Whitehaven came out and said it expected to be free of debt within 6 months, thanks to global energy prices. Quite extraordinary. Its share price is up 250% since last year. Quite an amazing turnaround. And finally, some of the fund managers have finally returned to favour. They've struggled as well. Net Wealth said its funds under management had risen by $4 billion during the September quarter, a really good result. That triggered a 16% jump in its share price yesterday. Hub24 added a record $3 billion in investor funds, and that triggered an almost 9% rise in its share price.
Now, Sean, what's making headlines in today's news media?
Well, The Australian is reporting that the Supercars motor racing series is set to be sold by owner Archer Capital, that's a private equity group, for $200 million less than what it was bought. Supercars will be sold for $100 million in a deal expected to be announced today. And the Financial Times is reporting that LinkedIn is closing down its social networking site in China, marking the departure of the last major US social media company from the country. LinkedIn blamed greater compliance requirements.
Running through some of the other stories around today, and Ron Briley, the famed corporate raider of the 1980s, is going to spend 12 months in prison for the possession of child abuse material. The 82-year-old former knight was arrested in 2019, and he pleaded guilty to 3 counts related to child abuse material. Last night, the man, estimated to be worth $200 million, spent his first night in jail.
The chair of Blackmores, that's the Vitamins Group, has taken a crack at Marcus Blackmore, the former chair and son of the founder, questioning whether he was adhering to principles of respect inside the company before he left last year. It's a really decent spat, this one, because Mr. Blackmore still owns 23% of the company and wants to vote his shares against the re-election of the new chair, Anne Templeman-Jones, at the AGM in a fortnight's time. Plenty of noise in this one.
Yeah, a bit of drama. Monash University, which has developed Australia's first mRNA vaccine candidate, has signed an agreement to have it manufactured for clinical trials starting later this year. It's going to be the first trial of a homegrown vaccine, and the Therapeutic Goods Administration has approved 3 COVID-19 self-tests for use at home starting November 1.
That is good news. Staying with COVID, a growing number of companies have mandated vaccinations among workforces. Westpac, Commonwealth Bank and Bank of Queensland joined that group yesterday.
And one more, Sean. Veteran Victorian Labor MP Anthony Byrne has resigned as the Deputy Chair of Parliament's top National Security Committee on the back of allegations that he was involved in branch stacking in the Victorian ALP in the 1990s. That story just seems to keep on going. Now, what's the key overseas news this morning?
Well, Singapore tightened its monetary policy yesterday, joining New Zealand, South Korea and Norway in pulling the pin on ultra-easy policy. The US is expected to start moving before the end of this year, and several European nations are expected to follow suit. It's all on concerns that the current bout of inflation might prove to be somewhat more permanent than first thought. In other global economic news, the UK economy grew by less than expected during August. The economy still hasn't got back to pre-COVID levels. And producer prices in China grew at their fastest rate in 26 years during September. That will add to global inflation pressures. New Zealand yesterday recorded its largest daily number of COVID-19 infections in more than 6 weeks, 71. All were in Auckland, and the government said cases were rising more quickly than expected. And Michael, finally, I don't want to focus too much on Elon Musk. He certainly gets a good run, but do you mind if I give you one more story?
Please do. Please do.
Mr. Musk of SpaceX and Tesla fame is worth around $225 billion, richest man in the world. Last year, he said he was selling his dozens of properties, and that's exactly what he's done. He's actually moved into a trailer van at SpaceX. I'd imagine it's probably a nice trailer van. Still, he's down to the rats and mice of his property holdings, but he's had to cut his asking price for a Californian mansion after failing to get the near $50 million asking price. Once again, boys and their toys.
All right, up next, Sean, is the Daily Interview, and today you are speaking to NAB Chief Economist Alan Oster.
Sure am. Alan's great to talk to, puts things in plain English. We talk about employment, housing, consumer spending, climate change, the whole gambit.
Yeah, it's a good one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Have a great day, Michael.
It's Friday, the 15th of October, 2021. Make sure you're following the podcast. Join us online on Twitter, LinkedIn, and Facebook, and sign up for our free daily newsletter. That's at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.